Hey, what's up, stock compounders? Brad here. So today I want to talk about Mohnish Pabrai's goal to compound at 26% per year. And given his new framework of going after these long-term compounders versus his old framework of buying a dollar bill for 50 cents, how feasible is it for Mohnish Pabrai to compound his money at 26% per year with these long-term compounders, right? How many businesses have actually been able to do that over the last 3 or 4 decades? So that's what I set out to answer in this video. Now, over the last couple of weeks, some of you may have seen on Twitter, I think I've also done a YouTube video about it, that I've been compiling a list of 1,000 bagger stocks, okay? Really inspired by Chris Meyer's book, 100 to 1 in the stock market as well. You know, books about how to get 100 times your money in the stock market. So I thought to myself, well, there's a lot, relatively lot of stocks that fall into that. 365 turned up in kind of both of those study periods. And so I thought, well, why not winnow it down even further and just tease out the 1,000 baggers and perhaps do some deep study on each of those companies. Maybe I'll write a book about it. I was able to find 22 companies that have been 1,000 baggers. You could have bought them at the low within the last 4 decades and held them until today, and they would have returned 1,000 times your money or more. And that doesn't include dividends, right? That's just price appreciation. So I have that list of 22 companies, and I thought, well, how common are these companies? How common are these 1,000 baggers? And so I set out to figure out how many unique public companies have there been in the US since 1980. And then we can compare how many thousand baggers there have been to how many different investment opportunities there have been in US public companies. So here's where I started the data search. Number of companies listed on the stock exchange in the USA. Okay, this is from 1975 to 2019. And the way I went about this is I wanted to know how many public companies were there at the beginning of my study for these 1,000 baggers, around 1980, okay? And what we can see here is in 1979, there were 2,401 public companies in the US. So that's the starting number I'm using. Now, in order to figure out the total number of unique companies over the last 4 decades, I looked up how many initial public offerings have there been in the US since 1980. So you can see 1980 to 2000, average of 310 operating companies went public. And then 2001 to 2020, an average of 113 operating companies. So I really just, calculated the total number of IPOs. Obviously, there's other ways to be a public company. You can have spin-offs, and then there's ways to shrink the number, right? You can have mergers, acquisitions. So, this is really a rough estimate of how many unique public companies there have been in the US since 1980. But what I came up with, starting with 2,401 in 1979, and then adding these IPOs for the last 40 years, we've got about 11,000 public companies in the US over the last 4 decades. So you can see my process here. Feel free to refine it. I wish it was easier just to look up how many unique public companies have there been in the US since 1980, but I wasn't able to do that. So 11,000, all right, that's the number we're assuming for the purpose of this study here. I found 22 1,000 baggers, okay? They're all listed here. You can see some of them go right back to 1980. You've got Walmart and Berkshire Hathaway, and basically Home Depot in that bucket. And then one of them has been more than 1,000 bagger in just 11 years. Okay, so now you can see here I have it sorted by how many baggers they are. So, back in 1981, if you had bought Home Depot, put $1,000 into Home Depot, today you'd have over $16 million. All right. It's just incredible what Home Depot has been able to do over the last 4 decades. But the big thing that I'm interested in here is not this total bagger number, but the compound annual growth rate, okay? Because the number Pabrai is trying to hit is 26%. And why is 26% a magical number? If you can compound your money at 26% per year, over a decade, you've got a 10x, okay? Over 2 decades, you've got 100x. Over 3 decades, you've got 1,000x, okay? 30 years, 1,000x at 26%. Now, so what I did is I sorted this by the compound annual growth rate over, this compounding period that led to this bagger number, okay? So when we sort by compound annual growth rate, we can see here there's 10 companies, at least what I've been able to find, over the last 4 decades have been able to compound at 26% or more per year, okay? So that's 10 out of over 11,000 public companies. So less than 1 in 1,000 would be this kind of 1,000x opportunity in U.S. public companies. Less than 1 in 1,000. So, it's tough, guys. It is very tough. Now, I'm sure there's some that I've missed. I'm sure there's been some great dividend companies over the last 40 years that would fit into this 1,000 bagger framework. Even just price appreciation. I'm sure I've missed some companies here. But, 10 out of more than 10,000 companies have been 1,000 baggers, have really met that 26% compound annual growth rate over decades in the U.S. leading up to today. All right. So current companies. Another thing we could do is we could look at, of these 1,000 baggers, more than 1,000 baggers, how many have been able to grow at 26% over the last decade, right? Because, a lot of these companies have done the majority of their compounding, not in the modern era, but in kind of prior decades. I mean, you look at some of these, Oracle, 10% compounded growth rate in the last decade. So, nothing exceptional about that. But if we look at which ones, how many have done over 26%, you've got Expel, Netflix, Amazon, Microsoft, Adobe, Apple. Okay, what is that? Something like 6 companies have done over 26% in the last decade that are on this 1,000 bagger list. So, you guys, it is very tough. I think there's a lot to be said for, trying for 10x opportunities and maybe rolling them over each decade. If you're looking for the long-term compounders, you could argue 10 years kind of fits into that. But, it's a really tough game, and I just want to drive that point home. The other thing that's really tough about it is not only have you had to hold these companies for so long, right? Usually 3 or 4 decades, but you also have to buy when nobody else wants to buy. Okay? This is assuming you bought at the low. What does it mean to buy at the low? Okay? It means everybody's running away from the business. Okay? You have to be a contrarian to the max to be able to buy one of these companies at the low. Okay? It's very difficult psychologically to do that. So you've got an incredibly long investment hold period combined with a willingness to buy when other investors are headed for the hills. Okay, I just want to take Expel because it's such an interesting example. What it's been able to do over the last decade. In order to buy Expel 11 years ago, the price to earnings ratio was 2.3. Okay, 2.3. I think it was less than $1 million market cap, trading over the counter. All right. Now, since then, the PE has gone from 2.3 to 97. All right. So it's been like a 43x in the price to earnings ratio with Expel. Now, the earnings growth in that 11 years has been like 134 times. Okay. So you've got incredible earnings expansion combined with a very strong multiple expansion. So that's the story for Expel. But I also want you to notice, look at the different industries that these 1,000 baggers are coming from. It is all over the map. Okay, very impressive how diverse the industries are for these 1,000 baggers. I mean, you got software showing up the most, 3 times, but I don't think, specialty retail, I think maybe shows up twice. You've got Ross Stores and the Home Depot. But everything else is kind of in its own unique industry. All right. So it just shows you, I mean, you can have these incredible performers in virtually any industry. So that was interesting. And I know Chris Meyer points that out in his book, 100 Baggers, as well. But yeah, just wanted to share this with you guys. It's about a 1 in 1,000, probably less, to end up with one of these 1,000 baggers over 3 or 4 decades. So, I'm not trying to discourage you. I just think as investors, it's very important to be operating from the facts, right? From truth, rather than, getting all hyped up over a particular strategy. So, yeah, let me know if I've missed any, if you guys know of any 100 baggers, or even if you know of a great tool, an online tool to run a screen to figure out which companies have been 1,000 baggers, ideally also incorporating dividends into that, because obviously that's a part of how we as investors make money over time. So just wanted to share this with you guys. Let me know if you guys want me to write a book about 1,000 baggers and really do, kind of a deep dive into each of these businesses to try to tease out, what were those really key factors that allowed each of these unique companies to thrive since 1980. So anyway, guys, hope this was interesting. Hope it instructs your investment framework moving forward. I know it certainly was interesting for me to dig into it. So with that, I will leave you all until the next video. Take care.